how are you? But for those of you who don't know me, my name is Francesca. I'm an Italian living in London, and here we talk about investing, personal finance, the stock market, career, and everything else related to that. So without further ado, let's begin this video. So hi guys, as I was saying, it's been a hot minute. I have taken a bit of a break from filming. I was Easter, I was working, and yeah, so there's that. I'm not going to try and explain it further, but today we are back stronger than ever. And what better topic to recommend activities with than inflation, right? It's a great topic, fantastic, and yeah, but not in all seriousness, inflation is one of those things that whether we like it or not, it's a reality of life. We have to deal with it from a kind of investment standpoint, and not even if you're not investing, you're going to have to deal with inflation regardless of whether you are investing or not. So better be aware of it, better know what it is and what it does to your money, and so that you can find ways to edge yourself against it and make sure that your money keeps its value in the long term. So without further ado, I want to begin this video kind of like, first of all, understanding what inflation is, right? So giving a very short introduction. And then we will look at reasons why inflation could be a concern right now, and then how you can protect yourself and what you can do about it. Very, very simply put, inflation can be defined as the rise in price of goods and services. That means that it reduces the purchasing power that each unit of currency, so let's say each dollar, euro, or what have you, for any currency, can buy. So rising inflation has different insidious effects. Since input prices are higher, then the consumers can purchase fewer goods with the same amount of money, and revenues and profits decline, and then the economy slows for a time until, of course, a measure of economic equilibrium is reached, and this is usually achieved by fiscal stimulus packages, or with kind of fiscal policy and monetary policy from the central banks of each country that usually take action to kind of deal with either hyperinflation or even deflation, because ideally it has been calculated that the ideal point for inflation to be at is around the 1.5 and 2%. So is there talk that now there is concern for increasing inflation? So as we know, for the past few months, with all that has been happening with the corona pandemic, and I'm sure that you are aware, and with the huge stimulus packages that have been released by the US and then the European Union with the recovery funds, etc., inflation has been actually at an all-time low, with levels around the 0.1%, like seemingly non-existent levels of inflation. And to an unexperienced eye, this could seem like good news, right? But we have said that it actually, a deflationary environment can also be negative for the overall economy. So economists and central bankers, they have been trying to potentially put inflation up again, to kind of like then stabilize it again around the 1.5 or 2% levels that we have talked about earlier. With these huge fiscal stimulus packages that have been released by the various governments, a lot of money has been has been created basically from nothing, and so there is a lot of money to get through. It is sitting there waiting to be deployed once the economy opens up again. Basically, as the various countries start opening up again and people start spending again, this will likely cause pressure on prices and drive them up. And so the fear is that the comeback of the economy will actually be much stronger than anticipated, which again seems positive, but then it's never like a fully like a black and white picture, right? So from the point of view of inflation, that can actually be negative and drive prices too up. And finally, another cause of concern is that it seems like central banks around the globe have been agreeing to let inflation kind of ride a bit higher than usual, rather than reining it in at the said 2% threshold that is considered a sweet spot, but the Feds and other central banks might be willing to ride a bit high and not rein it in, as said, in response to the unusual prolonged low level of inflation that we are currently experiencing. So now that we understand inflation a bit better, what does inflation have to do with stock prices? How does it affect the stock market? Because, spoiler alert, it does affect the stock market. And this is why we're talking about here. When inflation becomes a problem, the central bank usually takes care of it by increasing interest rates. And basically, when everything becomes more expensive, so mortgages, interest on debt repayments, on loans, etc. And this has a ripple effect throughout the economy, since people are less inclined to spend. And one major consequence of this is that the stock markets tend to be very volatile, even more than usual, because investors don't like sudden swings in prices and in purchasing power of money. So this can cause, in return, falling return or even losses and kind of big crashes of the stock market. In return, as an effect of this, the economy slows for a time until a measure again of equilibrium is reached again. So maybe now you're wondering, okay, this is not good news. What can I do? How do I protect myself against these negative effects? Well, so first of all, in the long term, stocks do a really good job at outpacing inflation, and it's a really important kind of caveat to make right at the beginning of this conversation, because maybe whilst in the short term it can be scary and even not profitable to be in the stock market, because you might experience short-term losses and your investments can experience a decrease in value. In the long term, we have seen that over periods of, we're talking 5, 10, 15, 20, the longer the better, years, the stock market has grown, as we said, right? So 10%, so these double-digit percentages, which far beat the rate of inflation, right? So even if it were to rise at 4%, 5%, which are very high levels of inflation and rarely reached, the stock market has still proven to beat those rates. So in the long term, by far remain invested. Now, what can you do in the short term? Actually, maybe counterintuitively, if you have eyed growth stocks or tech stocks that have been going for particularly high prices, and so you have not bought them because you've thought that they were too expensive, you might actually want to do that now when the whole stock market goes down. And so that's why I always have a bit of cash set aside to really capture these moments where there are big swings, and you can find these opportunities to catch these stocks that usually have been maybe trading for way too high a price, and when the stock market readjusts, they start trading again at prices that are more even real and not inflated, right? So that's what investors call kind of buying the dip or catching the falling knife, or kind of all those metaphors. So what you could do more kind of actively is prepare a watch list of stocks that you are kind of ready to buy when the market does go down, and you're ready to profit off of a negative situation overall. However, again, I will reiterate this again, in the long term, stocks do super well with inflation, and the worst place to be is cash, because cash, of course, sitting in a bank account with a 0.5% interest rate, your cash is definitely not beating inflation 9 out of 10. So what that means is, when if you only rely on cash for your retirement funds, for example, then 30 years down the line, you might go and withdraw your money, and you might be in for a very nasty surprise when you find that what you could buy 30 years before with that amount of money, now you can buy a very small portion of it with that same amount of money, because the purchasing power of the money has being eroded. Another thing that you could do is, and I think this is especially true for US investors, I'm not too sure honestly about European investors, whether we have something similar, just because it's not something that I've ever really considered that much, but I like the idea of it. And that is TIPS, or Treasury Inflation Protected Securities. Now, what that means is, very much what it says on the tin, right? So it means that these are index and securities that are linked to the rise of inflation. So they're actively turning a bad thing to your favor. So if inflation goes up to 5%, then TIPS also will go up by 5%. It's kind of like index funds, but linked to the price or the level of inflation. Now, these are not like high growth investments, because we have said that inflation tends to be at around 2% ideally, but it also means that they will always perform well. So at least that level of return is guaranteed. To summarize, guys, I didn't mean to spook you out, because my idea is that yes, inflation has been particularly low in these last few months. So I think that a rise of inflation will happen, and it's even a good thing, So if we could ideally get to that, 1.5 percentage point, that would be great. So I'm not sure when that will happen, and should it happen, it will probably be for kind of short term, and it won't go up like majorly. And it could even be a good opportunity to buy some stocks that were otherwise very expensive, as to make it tends to make the stock prices fluctuate and go down. And what for you guys, what that means is do nothing. So if you're not invested in the stock market, well, consider starting to invest, and especially when you see that there is a trend going down. Again, like, I don't recommend timing the market, but rather time in the market, right? So staying the course regardless of temporary ups and downs. But again, should you not have invested yet, then by all means start doing so. And if you're already invested, which I think is the case if you're watching this channel, then stay invested, don't do much, and if anything, just start compiling a watch list of stocks that you might want to buy later down the line. Now, the main thing is, don't react irrationally to the headlines that are going on. We know that these tend to sway opinions quite easily, so try and stay level-headed, rational. And with that being said, I'll see you in the next video. Bye.